Nanalal Kidwai joins us right now to speak about her sense of, yes, one, the policy, but two, more importantly, also that transpired over the last 45 minutes. Good having you, Ms. Kidwai. Thanks so much for taking the time out. Really would love to hear from you as a banker about the policy as well, but can't really help you first ask about what does this DMK situation or the DMK decision do to confidence, business confidence per se, and of course confidence of investors globally, because this just gives a very slender majority should things not reconcile between the government and the DMK, of course.
Well, we're going to have to see how this situation evolves. I think it's too early to say that there is concern in offshore markets, albeit our stock markets are reflecting a little bit of that concern right now. We're going to have to see how this evolves in terms of government's own support from outside, as it has received across many positions that they have taken in Parliament. But it clearly is something which is going to be watched very closely by the markets, both outside and here. I think, of course, the way the markets have behaved is also reflected in part by the RBI policy. Not because the rate cut of 0.25 was a surprise, because many of us actually on the street were not expecting a larger cut, but really more in terms of what the governor has had to say in terms of headroom for further action on this front, because many of us have hoped and believed that in the course of this year we would see at least a 0.75 to 1% cut. And if that headroom indeed is not visible, then there is an issue. In itself, the rate cut must translate to lower interest rates for industry. This is what industry has been wanting. It's one of the factors, but one only, but certainly a factor in terms of bringing investment back on the table. Now, will this cut in itself translate to lower interest rates on loans for corporates is a moot question. And I think here my concern would be that deposit rates have tended to grow at around 12% this year, and we've had credit growing at about 16.7, with the credit deposits ratio at an all-time high of 78%. So unless we see deposits go up and deposit rates come down, it's going to be hard for banks to translate a repo rate cut into an interest on loan cut. And I think that is what industry is seeking, not just the announcement from RBI, but the actual translation into the interest rate cuts as industry feels it, which is through its borrowing programs. So I think this is another factor which we would need to look at. Of course, the markets are a little tight on liquidity, as is inevitable in March because of advanced tax requirements. But in fact, liquidity is far easier this March than it has been before. So the fact that the CRR cut hasn't happened isn't a huge surprise.
Ms. Kidwai, I take your points about the rate cuts. We'll dwell on it in a bit, but I just want to get your point on what do you think the market takes from this? One, yes, the credit policy, because there will be no further rate cuts. Two, more importantly, reform measures, because there is, albeit a slender majority that the government has, if indeed DMK pulls out. And a lot of people would fear that the government will find it increasingly difficult to go out with proactive reform measures which the market likes but the allies don't, and therefore there might be a bit of a catch-22 situation here. How would you react to this?
And you're right, of course this is an area of concern, but a lot will depend on who supports the government through some of the policy changes that are attempted. And to the extent that we have an opposition party that has been quite liberal and pro-industry at any rate historically, I do hope that some of those bills will see support with dialogue, with discussion, with debate, maybe some watering down, but will in fact see passage. So a lot is going to depend on how indeed the opposition parties and the parties that have traditionally supported the Congress from the outside behave. But you're right, obviously there is going to be a greater dependency on these moves. But we have seen that whether it was on the rape bill and so on, that there is a coming together of thinking, consideration, and indeed important bills have come through. So we should not at this stage despair that while clearly the Congress has seen this reduction of support by the DMK, that in itself it means that all reform action will be at a standstill. I believe that we will see action going forward, but of course it makes it a much harder prospect.
Ms. Kidwai, also to talk about what the overall pickup in the investment cycle will likely look like, given that we do have all of these political dynamics as well as a fairly clear stance from the RBI governor saying that there is a limited room for rate cuts.
Yeah, I think it's, when investment cycles happen, they happen irrespective of the politics of the country. They happen with long-term prospects in mind. So the investment cycle is going to be driven much more by what does it mean for the economic growth of India, for specific demand for the sector in which you're investing. And the issues right now are of course related to where government is important to take things forward. But the issues that do need resolution are around power supply, around land acquisition, on getting projects which are stuck, because why are those important? We have just thousands and thousands of crores stuck in projects which are not moving ahead. And what that means for investment is new projects, in particularly infrastructure, which are the ones that are stuck, are really waiting, watching on the sidelines to see how these projects are actually now sorted through before they put new money in. So it's become very important to sort out the projects that are stuck. And I believe there is some movement there. We need to hear more about what those projects are that have been cleared. I understand there have been 2 or 3 big projects in power, and some of the coal-related blocks which were stuck are beginning to move. And it is these sort of things which are going to be far more important for industry to understand and read into than maybe the dynamics of what happens right now through government and parliament. But the ability of government to move these forward is, of course, going to be sorely tested in the circumstances. But a lot of it is not to do with parliament. It is not to do with regulatory change. It is around execution on the ground, on unscrambling interministerial issues. And that really falls squarely within the way government works on a day-to-day basis, not about policy change or parliamentary debate. So I'm hoping that really all of that continues as it should, because we were beginning to see the first green shoots of these projects that were stuck moving ahead. We were seeing the first moves on power tariffs going up at the state level, and that required a state level move, and it was happening across states irrespective of party. So it is these moves that actually signal that India is on the right track as well, and we have to ensure and hope that all of that continues to happen, because in fact it is not impacted by central government policy alone.
Great, Ms. Kidwai, really appreciate you taking this time out and joining us for this quick perspective. Great having your opinion on board.